Most people believe investing is risky, but here is the real danger nobody talks about. Every year you don't invest, your money loses power, prices rise, your savings stay still, and slowly, without realizing it, your future becomes more expensive. Now think about this. Two people earn the same income. One starts investing early. The other keeps waiting. 10 years later, their lives look very different. In this video, you will learn a clear beginner investing roadmap. No complex terms. No hype. Just a simple path from zero knowledge to your first investment. If you are middle class, your biggest problem is not low income. Your biggest problem is not knowing how money should work for you. Schools don't teach investing. Families focus only on saving. And the internet makes investing look confusing or dangerous. So most people do nothing. And doing nothing is a decision that costs money. In this video, you will learn why investing is necessary today, what investing actually means, how beginners should invest safely, common mistakes to avoid, and how to take your very first step. This video is not about becoming rich fast. It is about building financial stability over time. Why saving alone is not enough. Most people are taught one rule since childhood. Save money. Saving is important. But saving alone does not build wealth. Here's why. Inflation increases the cost of living every year. If inflation is higher than your savings growth, your money buys less over time. Your bank balance looks safe, but its value is slowly shrinking. Think about this. What could you buy with the same money 10 years ago? And what can you buy today? Saving protects money short term. Investing grows money long term. What investing really means? Let's simplify investing. Investing means putting your money into productive assets. Assets that grow or generate income over time. Examples include businesses, companies, real estate, funds that own many companies. When you invest, you are not gambling. You are becoming a small owner of economic growth. Investors think like owners. Gamblers think like speculators. This mindset difference decides long-term results. Why beginners fear investing? Most beginners share the same fears. What if I lose money? What if I invest at the wrong time? What if I don't understand anything? These fears are natural. But here is the truth. Risk does not come from investing itself. Risk comes from investing without knowledge or avoiding investing completely. Long-term investing reduces risk. Diversification reduces risk. Time reduces risk. Avoiding investing increases risk. Imagine crossing a busy road with your eyes closed. That is risky. Learning first and then investing carefully is not risky. It is responsible. The investing pyramid for beginners. Every beginner should follow a simple structure. Think of investing like a pyramid. Level 1, Emergency Fund. Before investing, you need safety. An emergency fund covers job loss, medical emergencies, unexpected expenses. This fund protects your investments. Without it, one emergency can force you to sell at the wrong time. Level 2, Broad Market Investing. This is where most beginners should focus. Broad market investing means owning many companies at once, reducing dependence on one business, letting the economy grow your money. You don't need to find the best company, you benefit from overall growth. Level 3, Advanced or Optional Assets. This includes individual stocks, real estate, businesses. These are optional and require more knowledge. Many people fail because they start here first. Strong foundations come before complexity. What should a beginner invest in? Beginners should keep things simple. The most beginner-friendly approach is diversified investing. Diversification means low cost, long-term focus, wide exposure. You don't need to beat the market. You need to participate in it. Imagine owning a tiny part of every major company. When businesses grow, you grow with them. This works because businesses innovate, economies expand, human progress continues, How much money do you need to start? Here is a common myth. You need a lot of money to invest. That is not true. Today, you can start with small amounts. What matters is consistency, not size. Think about this. Would you rather invest a small amount for 20 years? Or wait 10 years to invest a big amount? Time always wins. Money grows fastest when given time to compound. The power of compounding. Imagine planting a tree. In the first few years, growth looks slow. Nothing exciting happens. Then one day, the tree becomes tall and strong. Compounding works the same way. Early growth feels boring. Late growth feels powerful. Most people quit before compounding shows results. Imagine if you stayed patient while others quit. Common beginner mistakes. Let's talk about mistakes that destroy beginners. Mistake 1: waiting for the perfect time. There is no perfect time. Mistake 2: chasing quick profits. Fast money usually disappears fast. Mistake 3: panic selling during market drops. Market drops are normal. Panic is optional. Mistake 4: overcomplicating strategies. Simple plans work best. Most wealth is built quietly, not dramatically. Step-by-step first investment roadmap. Here is a simple roadmap anyone can follow. Step 1: learn basic investing concepts. Step 2: build an emergency fund. Step 3: open an investment account. Step 4: choose diversified investments. Step 5: invest regularly. Step 6: ignore short-term noise. You don't need daily updates. You need discipline. Investing rewards patience, not intelligence. Long-term mindset shift. Wealth is not built in months. It is built in years. Rich people don't rush. They repeat smart decisions. Middle-class people delay. And delay is expensive. The most powerful investment is not money. It is starting early. Let's summarize everything. Saving alone is not enough. Investing is ownership, not gambling. Beginners need simplicity. Time is your biggest advantage. Consistency beats intensity. You don't need to be perfect. You just need to begin. Your future wealth depends on what you do consistently, not what you fear occasionally. If this video helped you understand investing better, like this video. Subscribe for more simple finance and investing explainers. And comment below. What is stopping you from starting your first investment? Your future self is watching the decisions you make today.